What is your assessment of China's economy at this point, and how is this impacting your business?
Actually, we are actually surprised by the speed of the recovery. I think that in the early stage of the virus, everybody was kind of expecting that China will not be able to go through a very V shape. So everybody was more or less pricing in a U shape of recovery, and a lot of people were suspecting that. If you look at the first quarter, it was minus 6.8%. But since the month of March, we see a very good recovery. Actually, we see very good recovery. So for the second quarter, we see we were going back to the positive, and the recovery in China will be more like a Nike V shape, okay? But that was more because in the subsequent virus in China, we see the virus attack all the rest of the world. So the recovery might be slower for the rest of the world. But we still think at this moment of time, we are quite optimistic because it does appear it's better than what we thought originally. It does not impact our business in a great way because the recovery and the speed of the recovery seems to be very fast. And China, being the first one to go into the virus, seems to be the first one coming out from the virus. So we see most of the business coming into the normality in the last couple of weeks.
The policy response from China has been more conservative than many other countries. We talked about that infrastructure spending $600 billion. You've got that, you've got tax cuts and other measures, but still more conservative than other nations. Is there more that needs to be done on the policy front, to get to the point where the economy is back towards something looking like full throttle, or at least pre-coronavirus levels?
Actually, that was, I think the Chinese government and also the PBOC are doing a lot. It was because I think fundamentally the mechanism in trying to stimulate the economy is very different in China than from the West. You know, for one thing, if you look at it, this market is about 80% being supported by the bank lending. So if you look at the PBOC has been dropping the rate very fast in order to pump liquidity into the market, and it is via these banks, and the government has been encouraging them and giving them the different kinds of subsidy to support the economy. So it is going through the banks. They did not go the very physical, stimulus like in the U.S. or in Europe by giving the money. Is because their system does not support that individual allocation. So it's more on a macro basis. So when you see they are on two sides, one, they use the bank to support the economy, and then on the other hand, they have a much more macro measure in trying to support the economy. The special purpose bond you were talking about is one thing, and the other, the infrastructure building, is another. And then we are waiting for the final details of the National Party Congress when they have their meeting. They will be coming out with more. It's a very different approach from the West. And the other very obvious, and that people often miss, is when you look at the Chinese in the last 3 months, because it is so much relying upon the bank has pretty much provided a backstopper. So when you look at the bond market, which is really for the best of the names in China, the spread has been dropping. The credit spread has been dropping, and the interest rate has been dropping. And this is very different from in the U.S. or in Europe. So we think they will be coming out with a more physical measure after the National Party Congress. Right. They are doing as much as the West, except in a very different way.
CG, yeah, I think I wanted to pick up on one of the points you mentioned there as well. They're lending out a lot more, the banking industry. At the same time, though, I would imagine there's a whole lot of provisioning going on for bad loans that are expected to come up at some point. Do you think the banking industry is capitalized enough to do those things at the same time?
Yes, I think so, for the major one. But we are actually in a similar situation. The situation that will be faced up by the banks in China will be pretty much faced up by the banks in the U.S. and Europe. I think the governments all over the world are conscientious that they will be using the bank to support the economy. So I think the government support, and the Chinese has a past record, if there are not enough capital the Huijin, Central Huijin, and also the Ministry of Finance will do more capital injection in order to boost their capital base. I do not see that at the moment because the more serious the crisis and the more government relies upon the bank to support the economy, I think that they will inject the capital in order to help them.
Okay, now when it comes to the bond market separately as well, you pointed that out as well. There's been just an absolute avalanche of money